This is a video showing you how to turn this equity curve into this equity curve by essentially using the same strategy rules. Today I'm going to show you a great little strategy to trade US dollar Swiss franc, taking the signals off of a daily chart. And it works by taking advantage of negative correlation between US dollar Swiss franc and euro dollar. And I pretty much came across it by chance. I'm going to show you how I came up with the idea and of course exactly how to trade it. And I've even put those rules, I've written them down in a PDF document. You can download that for free, so hang around. After my demonstration I'll show you the link where you can get that. Last week I was thinking about new trading strategies, in particular ones that I could share on this channel with you guys. I know a lot of you don't have automated trading software, the likes of multi-charts, which I use, so I like to keep them as simple as possible, and that often means taking signals, or basic signals, off of a daily chart. I was looking at a chart of US dollar Swiss franc, let's call it the Swissy, and I knew by looking at that in comparison to euro dollar that there was some sort of negative correlation going on. Now, what I mean by that is, if you look at both charts, look at when the Swissy goes up, then euro dollar tends to go down, and they kind of work in sync with each other in opposite directions. Not exactly, but perhaps enough to do something with, something to create a strategy around that's going to give us an edge. I then had confirmation when I was doing a bit of searching, and I found this web page. It shows the correlation of each major pair to euro dollar, and we can see that the Swissy compared to euro dollar is very negatively correlated, which is pretty obvious from looking at charts. I recently created quite a popular video, an idea that I got from Larry Williams, and it showed a nice little strategy using an outside bar on euro dollar. And I thought, if it works quite well on euro dollar, then seeing as there's a very strong correlation, albeit negative, between euro dollar and the Swissy, then perhaps this strategy in one way or another will work quite well on the Swissy too. Before we go and look at the computer, where I'll show you the results of the strategy using it on the Swissy, we'll just go and grab the whiteboard and I'll just draw out the rules. They're ever so basic, just so you know how the strategy works. And then we're going to have a look at the results. Hopefully you can see this clearly enough. I already mentioned we're looking to take signals from just a daily chart. Now, what we're looking for, I've actually demonstrated a long setup here, so we're looking to buy. What we first want to see on a daily chart is an outside bar. Now, an outside bar is a bar, this one here, which has a high which is higher than the previous bar, and a low which is lower than the previous bar. So the whole range is outside of that previous bar. For a long trade, we also want to see the close of the bar less than or below the low of that previous bar. Okay, don't forget, I'll write all these rules out in the PDF if you're not quite following along. To do the opposite, to look for short trades, we want to see the same outside bar, but we want to see a close which is above the high of the previous bar, and that's be our short trade setup. So once we've got this set up for this long trade, we see the close below the low of the previous bar, and we immediately buy. Because we're looking at a Forex market, most of the time this is going to be pretty much immediately. Set your charts to Eastern Standard Time, which is sort of New York time, so then the daily bars will be drawn exactly correctly. So we've seen the outside bar, we've got a close which is lower than the previous low, then we buy immediately. The exit is when we see a first profitable close. I've drawn on this chart here the next bar, so the next bar you see we've entered here, the close is in profit, so literally we just close out. It might be towards the end of the day or just at the open the next day. Again, it's going to be very, very similar prices because we're looking at the 24-hour markets. And it's that simple. I'll talk to you when we go over to the computer about the stop loss, but essentially that's it. It's that simple. So let's go and have a look at the results using it on the Swissy. Okay, here we are at the charts. This first chart shows those original rules which I just showed you on the whiteboard. Now we can see this by looking at, for example, the bar here where my mouse is you can see it's an outside bar with a close which is lower than the previous low. So that's our setup to buy, and you can see we've bought on the open bar. We've held the trade, and then not until we've got a profitable close do we then close out the trade. So that's our original rules. So let's see how that's performed over the years. And we're using data here from 2010 through till the present day, which is February 2021. So we're looking at just over 11 years of data. And that's how the equity curve performs. You might have already seen that on the screen at the start of the video. So not something that's actually working. Although the Swissy does move, albeit negatively correlated to euro dollar, it clearly doesn't move in exactly the same sort of way, because these outside bar signals really don't seem to work, do they? Out of interest, I thought, what about if we reverse the signals? So, for example, here, if we got an outside bar with a close lower than the previous low, what about if that was a short signal rather than a buy signal? So on this chart, that's exactly what we did. These are the reverse signals. Let's just have a look at a trade so that we can see. We make this a little bit bigger. We can see here we've got an outside bar with a down close lower than the previous low, and we've taken that short signal. We've exited as soon as we've had the first profitable close. So let's see how that's performed. And it's slightly better than the original rules, but still pretty terrible. Nothing that I'd recommend you trade. But here's where things got interesting. I knew that euro dollar and the Swissy moved in sync with each other, albeit opposite, and I think that was a good reason to think or suspect there was a chance that this strategy might work, but you can see it didn't. But what if we applied the same rules, but using a chart of euro dollar, but then executed trades on a chart of Swissy? So what I mean by that is we'd have to change the rules around. We'd have to make the rules opposite. So if we were looking at a chart of euro dollar and we got that outside bar with a down close lower than the previous low, normally that would be a good buy setup for euro dollar. But what about if we use that exact setup, but then said when we get that setup, we go short, but not on euro dollar, on the Swissy. So we're using the chart of euro dollar to actually get the signals, but then we're actually taking the trades on the Swissy, regardless of the chart pattern or the chart setup on the Swissy. We're just using euro dollar to do that. So that's the next thing we're going to look at. Let's have a look at how that works. First off, let's just have a look at this chart. Now, this top chart here we can see is a dollar Swiss franc or Swissy, and this bottom chart is euro dollar. They're both 1440 minute or daily charts. Now, you can clearly see, if I scroll, you can clearly see how they move in sync with each other, but in opposite directions. That's that negative correlation. This is what I noticed and kind of prompted me to delve into these two markets as it was to find some strategies. Now I'm going to apply the strategy, like I just said, taking signals from euro dollar but executing on the Swiss franc. So let's have a better look at this and I'll show you some examples. So the first example here, this buy trade here. On the Swissy, we see this bar here was not an outside bar, but it did have a close lower than the previous low. But we're not even interested in what the chart of the Swissy is doing. What we're interested in is what the previous day on euro dollar was doing. So if we look down here, we can see that we've got an outside bar with an up close, which is higher than the high of the previous day. So normally on euro dollar, that would be a good trade to go short, but because these move negatively correlated, I've reversed the rules and I've said, okay, we want to buy the Swissy. Look at the next trade. There's a short trade here. So this bar here was not an outside bar. It almost was, but it wasn't. But look at euro dollar. We've got an outside bar with a down close. This is our prime setup for euro dollar for a buy trade. But on Swissy, because we've flip the rules, we're going to go short. Okay, so you can see now how we're taking rules off of the euro-dollar chart and applying them to Swissy. So let's see how that performs. And straight away we can see a really nice equity curve. So look at the average trade. And we've got an average trade of 181 Swiss francs, which is more than enough. At the time we've added trading costs, we're still going to be left with quite a decent amount of profit in this strategy. Let's just go back to the equity curve. If we look at this one, the green dots show us new highs in the equity. And I think you'll agree that for such simple rules on a daily chart, that's quite a nice looking, smooth, uptrending equity curve. If you've made it this far through the video and you're finding the video helpful, enjoyable, then please click the like button. And if you haven't already, please subscribe if you want to see more videos from me, just like this one. And you can download that free PDF giving you the rules for this strategy and the results. I'll leave the link to that in the description below. I've showed you the results taking both long and short trades. In the PDF, I'll actually show you the results of taking just long trades and just short trades, which I think you might find interesting too. To conclude then, I really do believe that these types of unorthodox trading strategy are what can give us edges in the market and put us in front of the majority of other traders. It's about thinking up new, different, unusual ideas and testing them out. Most of the ideas that I come up with and I think about don't work, but it's about keep trying, keep testing new different ideas, and eventually you do come up with some, just like I've showed you here. Well, that's all for today, and I hope you've liked this demonstration. If you have, then check out some of my other videos. I've got quite a lot on my channel now with strategy videos, just very similar to the one that you've just watched. I'm sure you'll find those very useful too. And until the next time, this is Jared Goodwin, and thank you.